So today was the first losing trade in quite a while. This trade just standard risk 1000 USD, fake USD. The main reason I believe that I lost this trade was because first of all, I got in without really or not neglecting a daily bias, but just not really fully obeying it. I just had like sort of a perma bull mentality, even though on the 4 hour we are bearish currently. It was bullish at the time. I just saw this one candle. I'm like, oh, we're gonna break structure. Even though this one was pretty much on its way forming a bearish trend, and on the 1 hour, probably officially bearish. This is when I entered, and we sort of broke structure to the downside a little bit, and I could definitely see that we were heading downwards, I guess. Looking back. Here and then the more I go into a smaller time frame, the more prevalent it becomes. And I kind of also had just contradicting I had no idea whether it was going to hit stop loss, or sorry, I didn't know which direction it was going to go, so I guess this might not have been a good day to trade exactly this pair. Number two was I didn't check the news. There's a lot of news on tariffs. I'm estimating that the US dollar is going to be highly volatile for the next week or so, I guess, because of these incoming tariff threats. So I'm probably just going to steer clear of the dollar because it'll be going up and down so much for like the next week or so, although I'm not entirely sure what my plan will be for that. Um, so the basic essence of the trade was that I took it off of a taking out with this candle right here, taking out this low right here, waiting for a break of structure to the upside, and then longing it once I get a retracement into order block. I found that order block on, I believe, the 5 minute. Price forms this massive wick down, comes out, forms equilibrium here, comes back in, breaks structure, find a break of structure on the 1 minute, execute there. And that's what happened. And then eventually we did hit stop loss right here. We got stopped out. And price did at least seems to be continuing going down. The thing about this trade that the reasons that it failed is because we hit stop loss, or I hit stop loss about 6 hours later after this trade I took. And I believe with a I'll have to look and see how many pips. I probably should have known this, but 30 pips is more than reasonable. We covered, or it covered that much within like from here, from 8 to like set. We were supposed to be able to cover that in that amount of time from here to 3. So that's like 2 hours. That covers more than 30 pips. So 30 pips in about 2 hours, I think, is pretty reasonable for price. I have to look into exactly how many pips per hour. That's another indication of something I need to learn, I guess. What to exactly expect and when to sort of throw in the towel. I always thought that by not giving up on a trade or just letting it sit, you were doing what was right for the trade because you were practicing discipline, when in reality, usually that's just laziness, disguised as being optimistic. So I'm gonna start figuring out when I'm supposed to throw in the towel on these trades, when I'm supposed to adjust what, and exactly what to do. The other one, obviously, as we mentioned before, is that trend was either bearish or very indecisive. It seemed to be going everywhere, and then I couldn't officially call it a break of structure to the downside, but it looked like it was going to do that, and I had no idea. So if the trend isn't that clear, I guess I shouldn't go for it. I also hopped into this trade at about 9:45, and ideally I want to be here at least at 8:30 in terms of like to be there before London session to check bias, news, mark out liquidity, and see what was exactly going on, what pair I want to trade today. Another thing I'll throw in is obviously the news check as before. And the last thing I'll probably say is I really wish that I don't know whether to trade one pair or all four of these pairs. And there's convincing cases I can make for both. The ability to trade on one pair means that you can accurately assess that pair the best, and you'll be able to master one pair, and it probably makes sense to go down to one pair before going on to many pairs. But on the other hand, if one pair is not viable for some reason, taking a trade on another pair, or for me, for example, if the US dollar isn't really looking good, taking a trade off of Bitcoin might have been the move. Here I can see I could have caught this liquidity right here getting swept, break of structure. Had I noticed that instead of maybe up here, but liquidity sweep, break of structure, I could have made a lot of money on that. I'm gonna see how many pips that is. That is, I guess this doesn't really use pips, but price went down $2,000 today, which is a lot. So, especially during New York, London overlap, I can catch these rips like right here. And I think that'd be a better idea. Maybe starting on the S&P 500. I'll see how that looks today. These all look very straightforward. Liquidity sweep, I'm assuming up here, break of structure down, and then NASDAQ, probably most likely very similar. NASDAQ actually looks really um similar. Yeah, where seems to be orders here, retracement into the order block, or this right here is taking out these areas of liquidity, retracement into this order block, break structure to the downside to um minus $2,000. That's quite a lot. So just figuring out the basics of my trading strategy, I think especially in terms of pairs and what to do in a trade is definitely what I need to work on now.